Hey everybody, it is Friday the 19th of July 2024, and the market's lost a little bit of ground for the most part. Semiconductors really took it on the chin, down 9.6% and 14% off their year to date high. The big winners were crypto, basically up 16 and 13% for Bitcoin and Ethereum. So let's take a look at these charts and make some sense of it all. The S&P 500 gapped below that 5-day moving average and then established that pattern of lower highs and lower lows below the declining 5-day moving average. So when that happens, we look at levels of interest that have the potential to become support, and then we look for confirmation that there is actually support there. Levels like a 20-day moving average. We look to see if it will hold in there at 551. Well, this is 551 right here. Did it hold? It did not. It was still showing a pattern of lower highs and lower lows. So I'm not going to be a buyer of that. That's not my style. I look at it and say, we look, let the market breathe, let it exhale a little bit here. We've had a phenomenal run in this market. We could draw a trend line off of this, I suppose, and maybe that's going to be a level of interest. That's also the anchor point from the last touch of that and this most recent leg higher. So I would say early next week, this looks like a likely place that maybe we sell into that 545-ish level on Monday and then see a turnaround Tuesday. Not a prediction, but certainly a possibility. As far as considering this stock, this market rather, done going down, I think you would have to see, first of all, that it does come down and test that level. Who knows? Maybe even continues down to the 50-day moving average at 540. I'm not looking to be a buyer here. I'm looking to say at 545, is there evidence on a shorter term time frame that maybe the buyers are gaining control, something like this? And it's not my intention to try to buy the absolute low. My intention is always to buy momentum as it turns away from a low that might have been this level right here, or maybe it's the 50-day moving average, or maybe it's just something else altogether. But then to look for it to make a higher high above that flat to rising 5-day moving average, and then finally I can look to say, I want to put my hard-earned money at risk. And if the market says, no, it's not done going down, then set my stop underneath the most recent relevant higher low on the time frame that I'm entering the trade, which in this case would likely be about a 30-minute time frame. The NASDAQ, as we know, lost ground as well. What did we see here? The pattern of higher highs and higher lows was interrupted. We found that the break of this market came down below the 50-day moving, I'm sorry, the 20-day moving average, below the anchor from that low over here. And what do we have below us that is the most important level of interest? Where are we most likely to encounter more eyeballs? Where is it likely that short sellers are going to say, hey, this is a good place to stop shorting? We'll stop shorting down at 470, and maybe we'll look to start buying some of that back, to start to cover, to stick some bids in. That 470-ish level might be the area where that occurs, where we start to stabilize. And let's just pretend, again, that this is 470. It comes down towards that level. I don't want to buy at 470 because maybe it's going to go down to the anchor from this low instead. But I want to look for evidence that the buyers are in control. I will not try to buy the bottom, because if I tried to buy the bottom, I might have tried to buy here, 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 and here, and no one has really done it successfully yet. So let it play out. Let the institutions do the dirty work of putting the big money in there to establish those bids where there's enough demand that it stops going down. And once it stops going down, which stocks start to rebuild the most quickly? Which ones are the most likely to get the bounce? Well, then you start to look at it on these shorter term time frames, not only the 30-minute time frame, but down into a 5-minute time frame, and say, where are we in relation to today's volume weighted average price? If we see a tight range during the morning and then it gets back above the daily VWAP, you make a probing purchase and you hold as long as it holds above the shorter term higher low on that 5-minute time frame. If by the end of the day the market has allowed you to hold that position and you think the risk reward is still good, that is, that we're back above a flat to rising 5-day moving average, well, then it's passed one test. It always has to pass the test. Is it still holding a key level? If you buy as it comes down, gets back above, let's say this is the daily volume weighted average price on Monday or Tuesday, it gets above, you decide to buy here with your stop there, and let's say that this is the 5-day moving average and it holds above that, well then maybe you're going to say, okay, now I'm going to transition this to a swing trade, but it has to, behave well as a shorter term time frame first. The Russell 2000 had a good week, but it didn't hold on to all of its gains. In fact, if you look at from the gap higher, where this market gapped up just a week and a half ago, we are now below the average price that this index has traded at. What does that mean? It means the average long participant in here is now losing money since that event. Doesn't mean the smart guy who bought here, because I know you're saying that's you, is losing money. But what we're seeing here is that we saw, first of all, a pattern of higher highs and higher lows broken right here. That's the cue to move to the sidelines. At least it is for me. And let this thing bleed out. Maybe sometime next week, maybe it comes down into the month to date anchor, and maybe it even undercuts it slightly, does this, and then the 5-day moving average flattens out. And then I absolutely want to be a buyer right here, because this is a nice move on the shorter term time frame, on the daily time frame. And when you base it on what we see in the weekly time frame, it still has room to run. So of course I want to have my eye on this, but I don't want to be the smart guy who buys the pullback. I want to buy strength after the dip. Never want to be a dip buyer. To me, it's a foolish strategy. Semiconductors, these guys pulled back pretty hard, as we mentioned. Was there support at the 20? No. Was there support at the 50? No. Was there support at the anchor from this low? Nope. What about the 38.2% retracement right in here? The 38.2% retracement of this low to this high. Well, that's this level right here, 38.2. No support there. So what's the next level of interest? The anchor from this low right down in here, 246. Does that mean it's going to be a place to buy? It might end up being the absolute perfect low. It might touch it and go like this. But if it goes like that and you get a nice bounce from it, it's most likely going to do some shakeout as well, and then give you a much better opportunity once the structure of the market has caught up. So there's no hurry to buy that bottom tick. I will not have a bid at that level. If it hits that level and bounces perfectly, it will not bother me one bit. I might look at a 1-minute chart and say, hey, where are we in relation to today's volume weighted average price? Not today, Friday the 19th, but let's say it's Tuesday the 23rd. If it's above the daily VWAP, then maybe I'll start to nibble. Biotechs, these were a great trade. I put it all on Twitter, and I had put it on Twitter just as I was getting stopped out yesterday, right here on the second third of it. So I'm out of this biotechs. I still like them longer term, but I'm not a longer term investor. I still think it's possible it does something along these lines, but I'm not willing to give my profits back. Once we see that pattern of higher highs and higher lows interrupted, well, then you get out of some. And then as it breaks a lower low below the 5-day moving average, that's my cue to get out of the balance of it. Maybe I pay a higher price next week to get back involved. That's okay with me if I buy it right here with a stop there. What I don't like is still holding it here and then holding it down at this point. And what if it fails? What if it fails? I'm not calling for that to happen. Nobody has a crystal ball. But if it fails, well, it's really nice to know that I'm not in it anymore. And people will say, well, why don't you short it here? Because the primary trend, we're above a rising 20, 50, and 200-day moving average. We've been building energy in this market for a while. Why would I want to short what appears to be a longer-term emerging trend? I'd rather be on the sidelines and wait for it to set up. So I have no position in the XBI right now. I got out of the TGTX, the final piece of that. I mentioned this on Twitter as well, just as I was getting out, right as it broke out to a new high. I love selling breakouts to new highs when the market is already extended. It just ran from $17.50 to $23 per share. Selling that breakout is one of the most satisfying things you can do. I sold some into that, and then we now have hopefully a pattern of lower highs and lower lows that brings it down towards 19, so I can repeat and buy this stock again. But for now, I'm not in it. I do still have 1/3 of my position in Amgen. I've been raising my stop under these higher lows, but for the final third, I've been giving it a little bit more room. My stop is currently down under here at 327.85, I think it is. So I'm still holding 1/3 because Maybe it continues to go and I can hold a piece. Either way, I'm in at 317 and change. So if I get stopped out up here, I still lock in 3% on that final third. That's worth doing in my book. Let's take a look at bonds. These guys are still, in a stage one accumulation at best. I pointed this out on Twitter as well. If you don't follow me on Twitter, some people say, well, I don't like Twitter. Well, you don't like good market information either, I guess. But as the 50-day crossed above the 200-day moving average, that triggers a so-called golden cross. Golden crosses are terrible for timing reasons. You basically break even at this point on this one. However, the last one, where did the 50-day cross the 200? Right here. The one before that, the 50 crossed above the 200, not there, but right here. So those are your three golden crosses. They're a reason to look at the market, just like seasonality. Seasonality is a reason to look at the market, but if you listen to sell in May and go away, that hurt you. So we look at it and say, what is price telling us? Well, price is telling us we've had this run. Now maybe we pull back and settle into the month-to-date anchor, which is the 20-day moving average as well. I've been pointing to this trend line also, and that really, back above here probably is what gets these bonds going. Where, if it can get above and hold above 94.50, then I think the bonds have turned. Let's take a look at some of the market leaders. Apple is down to its 20-day moving average. There is zero evidence that it's holding in here. I would be in protection mode. We saw the pattern of higher highs and higher lows broken. You can call this a shoulder, a head, and a shoulder if you want to. All it represents is the prior pattern of higher highs and higher lows has now switched to lower highs and lower lows. How long that continues? Maybe Monday it bounces from the 20-day moving average, or perhaps it continues down to the anchored volume weighted average price from this level. That would bring it down towards 216. Maybe the anchor from this low. These are levels of interest. They're not prediction and saying, see, I told you it would bounce their levels, just like the year-to-date anchor in AMD. I was hoping back here that we would maybe drift lower into that, rebuild, and go higher. But instead, we saw it break the month-to-date volume-weighted average price on a gap. Dip buyers got crushed, continue to get crushed as it closed near its low. And now there's people looking to cover maybe at the 200-day moving average, maybe to nibble at the 200-day moving average. But this is what concerns me most about AMD. We started out the year with some weakness. The buyers regained control. It got back above the year-to-date anchored volume-weighted average price, meaning the average long was making money for the year, 4 days into the year. That VWAP was tested. It held as support. It was tested. It held support again. Had a little shakeout below it, a little shakeout below it, but it held each time. Then we saw a declining 20-day moving average, and it failed. We saw the 50-day moving average declining, and then that year-to-date anchor acted as resistance. We got back above it, but now what does this tell us? It tells us that the average price paid for AMD by the average long participant, when you average them all together by volume, is about 170, meaning the average participant is down $18.50, about 10%, a little more than 10%. The average short seller, however, is up about 10%. So why waste your time with a stock like this where it's just such mixed messages in all these time frames? Amazon is right down to the anchor from this gap higher. This has been an important level. If it fails, is it going to fail similar to the way that NVIDIA failed at the anchor from this gap? We tested it, and then we failed. Now we're at a 50-day moving average. Is that going to hold? Or if we see a deeper sell-off, maybe we head down to the anchor from this low back in April. These are all just ways of looking at the market. There's no certainty in buying here. There's no certainty in buying the 50-day or here. These are levels of interest that have the potential to attract enough short covering, to attract enough fresh sideline money into buying, creating demand where it overwhelms supply, and then we start to stabilize. And from there, hopefully, we can catch bounce trades higher. That's all it is. It's a level of interest where that might occur. If that level of interest fails to hold, who cares? I don't care. I'm not married to the idea that it needs to bounce from the 50-day moving average. In fact, it's looking pretty unlikely to me at this point. But just because I say unlikely doesn't mean it's not going to happen. And if it does happen, well, then maybe I'll get involved somewhere over here next week and make a nice trade in NVIDIA. Either way, have a good weekend. Thanks for your time.